What is a full-time trader, guys? Doesn't have to work outside of that source. So using trading as a full-time income and doesn't have to work outside of trading to derive that income. That's a perfect example, isn't it? Often people say to me, I go, what's a full-time trader? And they go, somebody trading full-time. But the time bit is the bit in that question, isn't it? What is a full-time trader? But really a full-time trader is just somebody who derives their income from the market.
Positive, especially this weekend at the Art of Trading. Really concreted and solidly made me feel like I have made the right decision, and it's made me very excited about the future. Because I had no experience in the trade market, I still didn't know whether they were just another black suit trying to take my money, until this weekend concretely confirmed everything, and it was so amazing to see that they really are a family and they really are a tight-knit community.
My experience was very rewarding. The staff, I think, are so dedicated that it's a great atmosphere that you want to be around.
And we were talking about that risk and reward and how important that is, and what's my whole strategy for risk management, and if I'm having different portfolios, is my risk management strategy going to be different?
John Gow was unemployed when he started investing in shares through Wealth Within, a guide to help do-it-yourself investors make some smart decisions.
With trading, it's not about being in the market all the time. It's about just being in the market when it's the right time, because the share market, you can just trade with your laptop. I'm not being told what I can and can't do by a boss.
What your goal is what you can see in the future, isn't it? Yeah? Right now you don't know what you don't know, do you? And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah?
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale. Hi. Finance expert Dale Gillham from Wealth Within. It's nice to see you.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey, Dale, I want to make quick money, but it's not about getting rich quick.
I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
And welcome to Wealth Within Live, the Australian stock market show where you ask the questions and we give you the answers about all things investing and trading. Tonight we're going to explore the concept of Forex trading versus stocks and which is more profitable and why. This week is the first week of the month, and that means it's time to discuss the Australian stock market. And so we'll be looking at the All Ordinaries Index, and we'll also be looking at analysing your stocks, answering your questions, and a whole lot more. Hello and welcome, I'm Dale Gillham, Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now tonight for me is part great and part sad. You see, I love doing these Tuesday night shows, as your feedback, emails and other communications are telling me that you're all finding what we do very valuable to you, and that is changing the way you invest and trade for the better. Now what I mean by that is that many of you are saying that you are now understanding the market much better than you have in the past, and that this is giving you much more confidence. And that has been a great thing. Our goal, as always, is to assist you to become more profitable and confident in the market, and so it seems we're achieving our goal. Now, I hear you asking, why is tonight all so sad for me? Well, as you can see, Janine is again not sitting beside me and giving you her valuable insights and feedback. Janine so wanted to be here tonight, but she got hit with that cold that stopped me the other week. Now, I spoke to her earlier on, and she really is disappointed, but she did want to say hi to everybody. Now, she does miss this doing this show. She was actually quite gutted that she couldn't be on here. So if you're watching, Janine, here's a big wave for you. Hope you get better soon, and everybody looks forward to you being back on next Tuesday night. Now, before you ask, it was not me that gave her the cold. I know this. I know this as I've not seen Janine since we finished last week's show, as I took the rest of the week off for some much needed R&R, and I've not seen Janine, and she hasn't been in the office. And actually, I haven't seen Janine in a week because she's chosen to work from home rather than spread her germs around to me again, and hopefully not making me sick again. So that's really great of Janine. Now, before we get into tonight's show, remember the chat box is off to the right of your screen. Now, to post a question, you do need to be logged into YouTube. So get typing your questions, and like last week, I will get to as many questions as I can. Also, you need to hit that subscribe button down there on the bottom there, that big red button that says subscribe. Please do that. The more we have you hit that subscribe button, what you're doing is you're telling YouTube this is a great show, and then they push that up to a lot of the other YouTube viewers as well who might be interested in it. So it really does help us if you hit that subscriber button. I know about half of you haven't subscribed, so do it right now while you're thinking about it. Now, obviously, it's a bit harder doing the show without Janine sitting here beside me because she's got some really great comments to add, and obviously analysis. So please excuse me if I don't get to everyone's question tonight. I know it's always quite busy on the chat, and we always do have lots of questions. So now if you do have a question for me on a stock, please put it into the chat and also put into the chat whether you own the stock or whether you're looking to buy or sell, and your thoughts on why you want to buy or sell, or your thoughts on that stock. Now, why do I ask you to do this? Well, these are the questions I will go to first tonight, as it means you're thinking about what you're doing and really wanting to learn more. So don't just put down, Dale, can you look at XYZ? That's it. If you're just putting that, I'm going to scroll over those tonight because, as you know, every single week we do get lots of comments and lots of questions. So I will be going to those ones that give me a little bit more detail. Now, given Janine is not here, I've put a little segment, I say that properly, I've put a little segment together earlier on my thoughts on the Australian market, and we'll play that now whilst I get to looking at the chat. So I'm ready to answer your questions when we come back and look at all the stocks. So see you in a few minutes. Okay, let's just get my glasses on so I can actually see what's actually going on the charts. On your screen right now, you'll see a monthly chart of the All Ordinaries Index. Now, what I'd really like to discuss with you guys is when Janine and I are putting information on these charts, we're keeping them really, really clean. I'll show you a few different charts tonight while I'm actually doing this, just to show some of the work we put on it. But on a scale of sort of 1 to 10, we're only putting sort of level 1 stuff on this show with you. We're only putting really, really basic stuff or bare minimum on there just to help you understand the charts, not with putting a lot of our analysis on it. Now, looking at this, again, monthly chart, bring up all the data that I do have on here, and you can see the data is going back there to about 1982. Now, I do have some charts with data back to 1900, and hopefully one day I might even show them to you with some of the work we've put on them. But pretty much what I want to do is just show you a couple of things here. Now, I've just put using the trendline tool, I've just put a long-term momentum there where I've just checked on that bottom in 1982, the 87 crash low, and really just bring it out there, and you can see how the market runs along here, up and down and above and along this line. It does go vertical occasionally above the line, but always comes back to the line. Here's our 2009 low after the GFC. Now, it did break below it, but again, didn't spend a lot of time below it here or here back in 2003, because we had that big move down from January 2002, to March 2003. That was one of the other big moves. So it doesn't spend a lot of time below here, didn't spend much time below here, came down and touched it here into 2016, and there's our last one in December, our last major sort of pullback here. So it is rising away from that line, which suggests like always, eventually it will come back. But at this point in time, I see no reason why it won't continue on. Now, we can go for shorter term momentum if I use a shorter term trend line. And again, this is not a trend, a proper trend line. It's just using the trend line tool just to show momentum and how the market is unfolding. Again, I've just connected a couple of troughs here with that major low back in March 2009. And again, you can see it moves up, comes back to it, moves up, comes back to it, moves up, came back to it. Didn't spend much time below it here or here. Now it's moving a bit more vertical. So eventually I would expect as it moves up, it will come back to that line again somewhere through here. So that's really why we use some of these. These are tools that you can use on any sort of platform that you might want to use, broker platform. Just bring up a monthly chart, get as much data on it as you possibly can. A lot of them only let you allow 3 to 5 years. They don't do 20, 30 years. They just don't do that. Which is disappointing, but that's really what happens. But just if you can get 5 years or more, that's much, much, much better. So I also want to get rid of that. And I want to show a couple of other things that we actually do. We're looking at projecting price and determining where it's likely to move up. Now, right now, as you can see here, our market, if you can see here, it's closing right up nearly around 6,000, just over 6,700 points in that sort of area. Now, I do expect it to break the previous all-time high, which you can see there is 6,873 in the not too distant future. But if you've watched my Monday report, you'll know this 6 months up that we've had is the longest period since back here in 2009 where it's gone up and hasn't had a down bar. So I do expect one soon, and we'll look at that anyway. But really what I'm looking at is how far it's likely to rise. So this is where a lot of you are saying, well, where's it like? Where, if I buy a stock, I don't know how far it's going to go. Where's it going to turn around? How much profit can I expect to make? Where should I get out of it? And this is where Janine and I use a whole lot of price analysis, time analysis, and pattern analysis to pull all that together. Now you can see here 7273 is one level. Now we do cluster price. So if I put another one on here, another tool on here, you can see there's a cluster of 734577273. So my expectation at this point in time would be that our market is going to move up into this area over the coming possibly 6 months, maybe probably even less, depending on how fast it rises through. Remember, I said earlier, we've got to come back a little bit and then move up. And I'll show you some more things in a second, but let me put another one on, and it starts to get more clustering again. So you got 6,000, just under 6,900 here, which is where the all-time high is. But again, around 7,359. So if we keep doing it again, and again, 7,345. So you can see a lot of different levels are coming through here to us in terms of exactly where we're thinking the market might go to. And again, here's another one I put on. It says 7,259. So all of this is saying to me that the market is likely, before it finishes its more medium-term move up, it's likely to get up into that sort of area. Now, a couple of other things, I'll just get rid of those off the chart, and I won't really get too much into it. A couple of other things we do is big longer term moves, and you can see here this big longer term move came into this low here March 2009 after the GFC. Now this same move will come into a low sometime in around about the early 2020, so 2024. So if I just drag that up, you can see the low here fits right in with my little blue zone here. That's why I was suggesting our market would come into a low here. I was expecting it a little bit earlier last year, and it happened a little bit later. But again, I'm still thinking more longer term, our market will be bullish right up through till that sort of into 2024. So that's why I keep saying to our market, does look really, really nice at this point in time. Now, it's not to say it's not going to have pullbacks, as you can see through since 87. Lots of little pullbacks through here before it finally had its major low. But really, again, we've had that low here. We've got another 4-year low, I would believe, coming through that'll come through into here. So our high will come through between 2024 and probably around about 2027 in that sort of, but I'm expecting sort of mid-2020, the next major low, but it is looking really, really good. Just quickly just showing you some of the other things. This is the chart I use on Monday reports, as you saw yesterday. I said our market was up about 23%, but some of the other tools that I look at, here's some of the other tools. You can see it's running right up along here, and it's getting right to this apex, which is suggesting it's right near that all-time high right through there. But I would expect it to continue to run up along this angle over the period of the coming months, but not getting too much in here. And again, here's some more timing analysis that I do actually do. Here's one that I suggest. Remember, see there, it's basically in July. I'm expecting a peak and a pullback into July and coming down into August, September, which is this sort of green box here. So there's a whole lot of different tools and rules we use for our analysis, not just a couple of different things, just like a couple of trend lines, that sort of stuff, which is, as I said, a lot of things we're doing on this show are very, very simple analysis methods. Really high level analysis methods, not really highly technical in nature in that form of thing. But right now, let's get back into the show and let's get on to your questions. Welcome back, everybody. Hope you enjoyed my quick take on the All Ordinaries Index. Now, I did show a few charts with some analysis tools on it. I saw Ian commenting there saying, are these analysis tools? Yes, they are. Some of them are advanced. Some of them are very much sort of beginner type tools that I was using on there. But I just wanted to give you a bit of a flavour of some of the things that we actually do. Janine and I, when we are looking at charts for you, we're using all of our knowledge all of the time. So whilst there may not be a lot of analysis on the charts we show you, because we do try and keep it very, very light, as I mentioned in the video there, on the scale, a lot of people probably pedal back a little bit, is a lot of people say to me, look, I'm getting what you're doing. I think I know what I'm doing by watching your show and I'm learning how to analyse the market. Well, on the scale of 1 to 10, we really are not getting much over above a 1 in terms of analysis and technique, that sort of stuff. We're really doing only real basic stuff. So we do, if you did see our charts that Janine and I work on, when we're really pulling apart a stock or a market, you'd see this whole lot of different pages, a lot of different layers of analysis and lots of different styles of analysis in terms of price, pattern and time. So I just gave you a bit of a splattering over there. So yes, Ian, there is there, and you will learn about nearly all of that because I know Ian's actually started our diploma course. I think, Ian, you're on module 2, I think it is. And so you'll get to some of those in module 3, some in module 4 and some in module 5, and some of those things were in our advanced course. So, but let's get into our first question. I think there was a bit of a problem with our chat. I don't know what it was, and my team don't know what it was. It might have been a YouTube thing. For some reason, I think there was a little problem with our chat earlier on that you couldn't post, but it looks like when I'm looking down here, it looks like everybody's posting, so that's really good. But our first question, this one's actually from Ling Wen Zhang, hopefully I've said that correctly, who says, "Hi Dale, thanks for this week's video." I think from that point of view, I have been following your channel for months or maybe more than a year now, so congratulations, thanks very much for supporting us over all of that time. He says, can you please shed some light on SKT, ALG and AGI? I'll handle SKT. I'm not sure I'll get to do too much on ALG, and AGI. He goes on to say, I reckon they are all undervalued at the moment and close to the bottom. SKT might have already made her bottom and ready to rise, appreciated. So what I'll do is I'll have a look at the Optima charts now. So right on the screen, we're going to bring up SKT. First, I'll put my glasses on so I can see. This is where I need Janine, don't I? Looking at SKT, that stock's just bearish. It's simple as that. Has it hit the bottom? I don't think it has. A lot of people just see a stock falling and falling and falling like you see through here, and they think, oh, well, it's really, really cheap. And if let me bring up that weekly chart. And you can see the current pricing there on the stock is, dollar. The close currently $1.11, and they've seen this move, and they just see this slowing down of the downward move. That doesn't necessarily mean it's hit the bottom. It could just be the sellers stopping selling. Doesn't necessarily mean there's more buyers in the market, and for prices to rise, you need an overwhelming majority of buyers and overwhelming the sellers. So often a stock will go sideways, and we can see that through here, simply because the sellers pull back on their sells to let price drift up or not drift down too fast, because obviously when they're selling, they want to keep a good average price up, especially if they've got large holdings, and so it'll just go sideways, or you might see the rise go slightly up in price and then they'll come back in and sell again. Right now there's absolutely zero confirmation on this that it stopped falling. I wouldn't be in it at all. I wouldn't be touching it. I'd still be watching it if I were you. If you're interested, looking at the fundamentals, I'd have a look at those, look at its earnings per share, what it's doing, whether it's got potential for growth, looking at its dividend yield, P/E ratio, those sorts of things. But right now, this is technically bearish, and I need to assume it will continue to be bearish until it confirms that it's not bearish anymore. I'll just click on the charts of ALG and AGI for you, just to have a quick look at that. Again, same comments here. Don't see any joy here. Looks like it's continuing to fall. Again, not sure. You're trying to bottom pick, and when you try and bottom pick, you're actually taking high risk with your money. And I wish I had a whiteboard with me, I'd draw it, but when you're looking at the bottoms and the tops of runs, if you're trying to pick that very bottom point of a run or very top point of a run, you got less than 10% chance of getting that right. What we want to do, and really good traders wait for trends to start to happen before they enter into them, and so we're capturing that sort of 80% probability area. Right now, this is in that less than 10% probability of actually rising. It's not showing any signs of finding support. AGI is exactly the same. It's going down. It looks bearish. It looks like it will continue to do so, but stick them on your watch list, see what happens from there. But as I said, they're not stocks that I would look at this point in time. The next question we got is from Tony S, who asks, "Hi Dale, I had a question on the live video on Tuesday, so last week, but it was skipped. Could you tell me your thoughts on LNG? ASX," he says, "I've held the stock for over a year and the share price continues to decline." Now, I did put that in. I think Tony's also made a comment because I did ask him why LNG, and we don't skip stocks, we just fairly fit in what we can actually fit in. But Tony has got a comment, I think. Where is it, Tony? I've lost it here. Tony says, "Yeah, hi Dale, mentioned the other day you could look at LNG and you asked why I was holding it. The outlook looked great when I invested a year ago, but the company has failed to obtain contracts." So let's look at LNG, and I'll bring that up on the monthly chart. This just doesn't look good. It simply doesn't look good. And a year ago, we're talking about this sort of area here. It didn't look good then either. To me, and this is really where your fundamental analysis and your technical analysis will get into conflict. And what I'm saying here is, when we did research, or when I did research, and Janine and I did tons and tons of research, and we looked at stocks that were technically strong and fundamentally strong, and how far they would go if they matched on both of those criteria. We looked at stocks if they were technically strong and fundamentally weak, and looked at how far they would grow if we did buy into them. We looked at stocks if they were fundamentally weak and technically weak, what would happen there, what kind of growth they would have or losses they would have. And interestingly, when we looked at technically strong, fundamentally strong, we got the biggest rises. If we looked at technically strong and fundamentally weak, we still got a rise and we still got a good trade, but it wasn't as profitable as one that was fundamentally strong and technically strong. And if a stock was technically weak and fundamentally strong, it still kept falling. That's what was going on. And if it was fundamentally weak and technically weak, it fell even faster. So that's what we came up with in our extensive research. Janine and I don't say a lot of this stuff based on just thinking. We actually did a lot of research, a lot of testing, thousands of spreadsheets and back trading, testing stocks and testing theories just to see whether they break and whether they work. This stock here is going down. It was going down back here. There was no technical reason to own this stock. Right now it does still look weak. I wouldn't have my money in this stock. It's sitting at around that 26 cents. It's not a good looking stock at this point in time. Let's have a quick look at the weekly chart. There's no real joy in the weekly chart too, Tony, so I'm not really sure I can give you much excitement about your holdings. Hopefully you didn't put too much into the stock. Again, this is really good value about why you should have a stop loss on everything that you own. Doesn't matter whether you're an investor or a trader, always have an exit strategy, and this is what I'd suggest. So if you're looking at it right back here in sort of May, June, back in here, if I just put my price range percentage tool, let's just put, say, there, you at this point in time, you've had a 45.55% loss. So I'm assuming you've got a fairly heavy loss. If you just put a 15% stop loss on that, you would have been out a long time ago. And if you'd put a 15% stop loss below a recent high, which is what I talk about in my book, Accelerate Your Wealth, you would have exited somewhere around about this sort of level, around 73, 74 sort of cents. So you think of how much more money you would have had. Again, I don't know how much you've got in it, but right now I wouldn't be in this stock at this point in time. The next question we have is from Derek Duval, who asked, "Hi Dale, great show, very informative. Thanks for your efforts." That's our pleasure, Derek. So thank you for being a part of the show and asking us a question. He says, "I was hoping you could look at ALC for me and give me some thoughts for that." Cheers, Derek. So let's have a look at ALC for Derek, and on the screen. Looks like it's a specky type of stock or lower cap stock to me, very much so. Look at this sort of thing here, very much really volatile ranges over short periods of time. This is all opens and closes all together, not really a stock. Looking at this 13 cents, not a stock that I would ever trade myself. Let's just bring up that weekly chart. Right now it looks like it's going up. It really does look like it's going up, but how far up it's going to go, it's got a lot more volume since here, obviously since March, so some nice volume coming through in here, looking good. But what have we got there? 4 million shares at 12 cents. Multiply that out with your calculator and you're not going to get a lot of dollar value into that. Have a quick look on the daily chart and you can see how illiquid this sort of stock is. Let's look at this day today. It's traded 3 million shares at 13 cents. So sure, that's less under $1 million traded today on this stock. Well under $1 million traded today. So a bit too illiquid for my liking. I guess, as I said, I don't really like it from that point of view. Looking at the monthly chart, we've had 1, 2, 3, 4 bits month up. It's getting some resistance here. So if you don't own this stock, I wouldn't be getting into it right now. That's not one thing I would be doing. I'd be putting my exit strategy together on this, and if it starts to fall away, I'd get out pretty fast because, as you can see, it can fall quite fast, and that's really what I'm thinking at this point in time. Let me look at see if we've got another stock. Now, I know we had, what do we got there? We've got a couple of questions here. We've got James Porter on the chat, who said, "You recently said you thought the Aussie market could make an all-time high this week. Do you still hold this view?" James, I'm sure what I said in my earlier recording answered that. It doesn't matter to me when it makes the new all-time high, whether it's this week, next week, last week, or in the next month. It will do that. It's no doubt in my mind it will. It how fast it does it. The interest rates on the Reserve Bank put interest rates down today. They're now at 1%, so that's interesting. The market did spike a tiny little bit before coming back to close just slightly higher today on the market. That recording was done before the market closed, or the early recording. So, but I still see our Australian market going up, and for the next 1 to 2 weeks, and then start to come down again, as I said, into sort of later July, possibly August, which is what I'm talking about on my report. But really look at the stocks you own, and that's the important thing I keep saying to people is, always look at the stocks, don't look at the market for what you're buying and selling. The market's just telling us what 500 stocks are doing en masse as an average, basically. And whereas looking at the stocks that you want to buy and sell and what you're managing is far, far more important than whether the market's making an all-time high. But it will do that. I'm very, very certain of that. We've done Tony. Jack Wheeler says, "Hi Dale, I'm currently looking at Linus Corporation. Its volume has picked up a lot and looks like it will make a big bullish move." So let's have a quick look at Linus. Now, I know I've got to get, for Mick, if you're on board, we will get to AMC. I think Mick asked me to look at that. But looking at Linus, it's looking like it's nicely moving up. Again, this is a little bit more of a volatile stock, but it's a lot bigger stock. If we're looking at here, 11 million shares at $2.51. Much bigger stock, but quite volatile. And if you see here, looking at this over the past few weeks since the 10th of May, we're talking 76% run up. And then if I look at it again on the downside over the past few weeks, we've had 23%. Closing today down 18% from that high. And we've had 1, 2, 3 weeks and a bit down. Or what have we got there? If I just expand that, 1, 2, 3 and a bit weeks down. Right now, this is a good sign at this point in time, how it gapped down and is trading up. It looks better. It looks like it may be finding support, but I'd like to see it continue this move up this week to come above the high here from last week at $2.67. I'd like to see a little bit higher than that. If it can do that and start to move up, we might get another nice move and go through this level of $3.16. So that's what I'm thinking of there. Looking quickly at the monthly chart, let's have a look here. We can see again, nice move down. Looking at the bigger picture always helps. Now, I know I did talk about daily charts next week, and I did have somebody saying they disagreed with me on the thing. That's okay. People are allowed to disagree with me about daily charts, and I do continually say that daily charts aren't very helpful to traders. They're actually much more noise. There's a lot of noise in the marketplace, and the best traders trade for longer periods and they trade less. And as I said to this person, I've never ever taught a trader that was all on daily charts or mainly on daily charts and had their focus on them. I've never had a trader that I couldn't convince that I taught to move into weekly and monthly charts, and then the result was they traded less and made far more money. Now, I don't know what about you, whether you want to trade more and make less money or you want to trade less and make more money. I'm always the second place, trade less, make more money. And right now, this stock is looking good. We've had a high back here at 296 in May. It's broken through that, so I'd suggest it's still going to move up. It's probably going to move up in the order of maybe, I think it's not out of the question for probably another 30 to 50% rise over the next 6 to 8 months in that sort of bracket. But that right now is a bit of an educated guess rather than solid analysis. I haven't put any analysis on the chart, but it does look really, really, really good. So I don't think, let me have a quick, no, what I'll do is I'll get into our main topic. Oh, there's Kelly on the chat. Hello, Kelly. I haven't chatted to you for ages. Kelly's an old student of ours or graduate of ours. So welcome to the show. I haven't seen you on before. Let's get into tonight's topic now. Now we've got, let me fix my earpiece. It's just about to falling off. Tonight's topic, should you trade stocks or Forex? Now, to let you know, this is a question a lot of people ask me along with the question, which is more profitable, which is it shares or FX, and why is one more profitable over the other? Now, quite simply, the reason why many choose to trade foreign exchange or Forex as it's known is because they believe they will make far more money in a shorter period of time than if they chose to trade stocks. Now, it's interesting, that's perpetuated by if you start trading or you start Googling around and you start talking about trading the markets or trade stocks or learning to trade, those sorts of terms on Google, all of a sudden you start getting bombarded with ads, and most of those ads are from FX brokers and FX providers and FX educators. So I have this old theory, the one that you get bombarded with most is the probably thing that you should stay out of, because these people are churning a lot of people in terms of a lot of people getting into the market. They're churning them into their accounts. And Janine and I have said it before, when you're looking at things like FX and market makers in their accounts, is they know a lot of the money that goes into the margin accounts becomes their revenue for the year, and that's about 90% of those. And they know that most FX traders, their longevity in the market is measured in weeks and months, not years. But making money on trading Forex, I don't want to sort of put everybody off it, but it really is possible to make a lot of money on Forex. But not only is it quite possible, but if you have a high degree of knowledge, skill and experience, you will get there. And that's the point. You need to have a high degree of knowledge, skill and experience to be able to trade Forex very competently and confidently. So in short, beginners should avoid trading FX altogether, simply because it is a fast-moving market and it's highly leveraged. Now, the end goal of these people that talk to me over the phone or on email when they do try and contact me, so the end goal for many of these people talking to me about trading or trading the stock market is that they wish to day trade for a living. Now, when I ask people what day trading is, most really can't answer me, but what they're really looking for when I get out of start asking them questions and get the nuts and bolts out, in other words, when they say they want to day trade, what they want to do is replace their income from their day job. So if they're earning $50,000, $100,000, $200,000 on their day job, they want to replace that with getting it from the market. Don't necessarily want to work 40 hours a week to get there, but they haven't thought of that correlation between how much you're working, what your income is, and how trading is going to provide that. But all too often, these same people fall prey to that myth that trading more or trading highly leveraged markets such as Forex means that they'll make far more money, when in reality the opposite actually rings true for the majority. Now, unfortunately, many believe they need to replace one job with another, and so trade on a daily basis in an attempt to achieve their financial goals. Now, this pursuit of the dream of replacing your income through day trading is often spurred on by these professionals that I mentioned just before, such as brokers who make money every time you trade. They make money whether you make money or not. So every time you enter and exit, they're making money. So to me, you need to have a look at that about what's the goal for you. Are you there to make money, or are you there to help brokers make money? Now, the majority have taught that in order to achieve day trading excellence, that you need to use daily charts. And you may remember, as I said before, we discussed daily charts in last week's show. So if you haven't seen it, go back and watch last week's show. Not right now, but after tonight, go back and watch it. But if you remember, we also mentioned that individuals who trade less using the weekly, monthly charts make far more money. So trade less and experience far less stress. Now, as I said before, I'd rather trade less, make more money, and have a lot less stress. And it's just smart. Because to me, trading for a living is just about replacing your income. It doesn't matter whether that income comes from 1 trade, 10 trades, or 20 trades, or 100 trades, as long as you replace your income. And when you look at it like that, rather than a 9-to-5 job, you start changing how you're experiencing trading and what you're doing. Now, trading less to make more money sounds like a better way to do things, but how do they actually achieve this? Or these people, how do they achieve making more money in less time and less work? Well, quite simply, it's because they've learnt to trade well rather than often. Now, in order to attain a lifestyle instead of making trading their lifestyle. Now, trading well means by following rules, having a structured plan, having a process, having the skills, knowledge and experience to enact that. And trading well means following that plan every single time, whether the trade wins or loses, or whether you make money or you don't make money on the trade. So trading well means following your plan. Now, in short, because they are better at what they do, so these educated, experienced traders are better at what they do, they make better trades, or they take better trades and better positions. They stalk the market, which means their trades are longer in time and less risky than the majority of people's, and so they make far more money. Therefore, the real benefit of trading well with good rules is that they can spend less time achieving far better returns. So let's now take a look at a typical trader who wants to trade highly leveraged markets such as Forex. Now, if you've been watching many of my previous educational videos or read my latest book, Accelerate Your Wealth, you'd know that most traders attracted to this market only have a small amount of money to put at risk, which is why I say they should not even consider trading leveraged markets when you've only got a small amount of money. Basically, if you can't afford to lose it, then stay away from high leverage or speculation altogether, like those low cap, high risk stocks under $1 that we talk about, those illiquid ones. But that aside, let's look at the outcome of somebody with $5,000 to trade. And let's assume this person has a win-loss ratio of 3-2, meaning they make money on 3 trades and they lose on 2 out of those 5 trades. So 60% roughly win-loss ratio. Now, most of you would be familiar with me saying that, you'd be familiar with me saying let your profits run, cut your losses short. Well, if you've been watching Janine and I for any length of time or listening to our podcasts, etc., you would be very familiar with us talking about let your profits run, cut your losses short. Unfortunately, it is really common for traders with little or no knowledge to cut their profits short for fear of losing it and let their losses run. So they're actually doing the opposite. And they let their losses run in hope that the asset or what they're trading will turn around in their favour. Now, we've seen a couple of stocks already tonight where people have let their losses run, like LNG was the one that we looked at there, the person that had LNG. Never let your losses run, because if you lose 50%, the asset then has to rise 100% for you to break even. So that first loss, or the quickest loss, is the best one for you to take. So let's take a quick look at what it is costing you if you decide to trade long, or in other words, for the market to rise, and instead the currency that you're trading falls away. Now, if I can bring up my spreadsheet that you can in a second. So let me bring that up on the screen. Now, you can see in the top section in the grey that we've got up here in the top section that if price moves down by 1%, you have lost 50% of your margin investment of $1,000. So if you put $1,000 up to get that position of 71,377 contracts at a buy price of 70 cents there. 1% movement means a loss of 0.007% or $500 on your $1,000 margin, or 50% of the margin that you put into that leverage trade. If it moves by 2%, you've lost 100% of your capital or of your margin from there. And any currency pair, as you'd probably appreciate if you look at the Aussie US dollar or other different currency pairs, any currency pair can move 1 or 2% in a day. And so you really do need to be fully aware of the risks that this sort of trading can possess for you. So looking at this, if it continues to fall, now you have to put up an additional margin to cover losses, which can become very expensive very quickly, as a 5% fall in the currency pair will mean you need nearly $2,500 or half of your total bank, which is here. So a 5% fall in your position, $2,500 gone. So your margin was $1,000, so 2.5 times your margin. So you would have need to have money in your margin account to cover that, because as I mentioned last week, I think it was last week, it's called mark to market. So every day they settle up the position between you and the broker. So they'll take money out of your margin account or put it in depending on whether the trade goes your way or against you. If it's going against you, they're taking it out of your account every single day. So you might need to keep topping that up. Now, if you've got more than one position going the wrong way, then you can lose your margin account or your $5,000 very, very quickly. Now, trading FX, you really can't do it. Statistically, it's impossible to make good money on $5,000. You really do need in the order of closer to $50,000, but an absolute bare minimum would be a $20,000 account first before you even start, because of those drawdowns when you are losing that 1, 2, 3, 4, 5%. And if you don't have solid rules, looking at that 10% fall is $4,999. So you're losing using all of your bank if it falls 10% or your position falls 10% before you exit. Now let's look at what it means from a profitability point of view. If you were to trade Forex CFDs and you place $1,000 in each currency pair trading the Aussie US dollar FX currency pair, and you had a margin of 2%. Now, this is the blue area down the bottom here. This means each position would give you exposure to $50,000. Now, again, in this instance, you believe the Australian dollar will gain in value compared to the US dollar. So excluding holding costs and any other sort of brokerage fees, etc., the profit loss outcome with a win-loss ratio of 3-2 looks pretty disappointing. As you can see, with a 1% gain in each of the 3 times you trade, it is successful on a 1.5% loss when the trade goes against you. The end result is that you've actually made nothing on the 5 trades. And again, 1 to 2% moves on currency pairs really is quite normal. So this one down 1.5%, that one 1.5%. You've lost $750 quite quickly. And when you've made money, it's $500 on each trade. This is very, 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 very common type of scenario that I find with people trading FX, is they quite often will sometimes, put it this way, markets don't crash up, they crash down. So when markets move down, people are a little bit more positive that they got, and they stick to their rules, stick to their thinking that the market's going to go in the direction that they originally analysed. And because their analysis is flawed and they don't want to be found out to be wrong, they will hang on to stocks moving or positions moving in the wrong direction. They're quite quick to get out of positions moving in the right direction to protect profits, because they fear they're going to lose it because they don't have solid exit rules, whereas anything going against them, they'll hang on a bit longer. That's why I've made that 1.5% to 2%. But if we change this loss to 2%, it really changes the equation on those 5 trades to you're now losing money. Now, some of you will be sitting there thinking, yeah, that sounds a little bit like me. I hang on to those stocks that I'm losing money on way, way too long, and I do jump out of good trades too early for fear of losing my profits. If that's you, maybe there's a better way that you can do it. And I know we can teach you to do that through our diploma course and in our other courses. So it really gets down to what is it worth to you. Now, a while ago, I was talking to a trader who'd been trading foreign exchange for about the past 3 years. And he had multiple screens. Now, I think he had about 8 of them, and he said they're all over his desk, these 8 screens, multiple stands 8 screens. I have talked to traders that have 12 screens and tons that have had 4 to 6 screens. But this gentleman told me he had watched them. Basically what he did was he watched the markets all day long and all night from those computer screens. So basically he didn't have a life. He was got up in the morning, had his breakfast, looking at the market, seeing what happened overnight while he was asleep, looked at the Australian market, and then moved into the night and looked at that. Looked at the markets trading overnight. Now you can imagine how stressful that would be, looking at computer screens with things going up and down all of day long. And you've probably seen some of those movies where you see the broking houses with screens all over the place. I've been into some of those broking houses, and it can be quite stressful for the traders in those situations. Now, I joked to this gentleman that a toilet break could be very expensive, and whilst he laughed with me, he also agreed on what I was actually saying, that toilet breaks can be expensive if you're trading high leverage. Now, given that he was inquiring about our education course, I asked him why he was calling me, as I have to assume that he was not doing really that well. Otherwise, why would he bother being on our database and contacting us and wanting to chat to myself if he wasn't wanting to improve in some way? Now, he said he was making money, and often when I chat to people, they sort of give me that line, yeah, I'm making money. But when I finally keep asking them questions and they break down some of those ego barriers or those ones that they don't want to, you don't want to admit you've got it wrong or you're not doing it the right way. I understand that as a guy. But once we break that down, we actually find the real story. So whilst he was making money, it wasn't a lot. But however, what he wanted, when I said to you, what do you feel that you need in your trading? What he said to me, I want more structure in my trading, much better strategies. I want to really know what I'm doing, understand reading the market better, looking at the charts better, having better structure, better strategies, better trading plan. And I don't want to be watching the screens all day long and wasting a lot of my time on this. I want a better lifestyle. So I'm not sitting there having those toilet breaks that cost me a lot of money. I then asked him to add up all of the hours in a week that he spent trading and studying the market, whether that's YouTube or websites or chat forums or looking at the market, doing back testing, whatever it was. I asked him to add up all of the hours that he did put into it every single week, and then divide that into the returns that he was making. Now, after he did that, I said to him that it was my guess that he would probably get his hourly rate would be better working in McDonald's than trading. And he agreed with me straight away. He goes, yeah, you're right. And then all of a sudden there was a blank spot on the phone, and the penny finally dropped that he was doing it wrong. He was doing it completely wrong. Because more is not better. And what I mean by that is more trading, more screens, more data is in most cases overcomplicating a process that should be really, really simple. Now, this is what I shared with this person. Shortly, I'll share with you another little video with you that was taken at a weekend workshop for our students. We used to do it once a year. We don't do it anymore, so don't ask. We finished it last year. And on the Friday night, we used to always allow visitors or non-students to attend this session. Now, during the night, we had several traders up on stage and allowed the audience just to ask any questions they like. And all of these traders were trading just shares with cash and putting in just a few hours a week, and were making far more money than this person trading FX for the past 3 years, who was on the phone with me trading full time with those 8 screens. So they were trading more money. They were trading cash on stocks, and they weren't trading with 8 screens. They were only doing a couple of hours, a few hours a week each, and they were making far more money. So this is why I suggest, especially for beginners, trading stocks is far better, far easier, less stressful. You'll make far more money. And most people trading stocks are making more money than those trading FX. And as I said, to me, it's about quality education. So is trading FX better than stocks? Well, to qualify this statement, we really do need to look at knowledge, skill, and experience. So if somebody is highly skilled, then trading FX is very, very profitable. That said, it does take a lot of work to achieve those results, and you need to know what you're doing. So if somebody's not really highly skilled, then FX is not the place to go to attempt to get your goal of trading for a living, and the stocks really are the best place for you. But time doesn't allow me to fully discuss all of the hurdles and issues that those who are new to the markets will encounter with FX trading. However, in broad terms, you'll have to deal with platforms, brokers, market makers on top of understanding the market and how to trade and how to analyse the market. So that's it for our topic for this week. Now, we have another question, and this one's from Mick, who said, see you and Janine tomorrow night, and could you have a look at AMC? If you have time, you were pressed being on your own last week. Looking forward to it as always, Dale. Kind regards, Mick. So yeah, that's your time, Mick. So I'll just bring up Optima so we can have a look at AMC. Where is it? There it is. So we'll just bring it up. I'll put my glasses back on again so I can see. Let me have a bit of a drink. Now AMC, looking at that, it's got a whole top through here. So we're looking here at 1666. We're looking here at, 1678. And this top at 1667. So there's a bit of resistance through there. But I think this is looking all right, Mick. I think you'll do okay if you're not in this stock, or if you're in this stock at the moment. I think this one bar down, if we do get a move up through here, I think it'll break through this level and go on quite nicely. Again, like I said, stocks do go into that sort of sideways pattern, get a bit of resistance and then break through. So I still think there's only a small move down here, but I could actually give you sort of a price target on this one here. So right now I would be looking at a minimum of probably up in the realms of that $17 at this point in time. But again, but if I wasn't in this stock, I would be waiting for it to break through this level here before I entered. So there's some reasonable, where's my reasonable profit in this one at this point in time. So let's do that. Yeah, it's not too bad, about 5 or 6% from where it is, but I think it might get up to there. But it could even get up to that $19. I need to do a little bit more, but my guess is minimum $17, probably up to $18, that sort of area there. So now let's have a look at that video I mentioned so I can have a drink and get my voice back, look at the chat and come back and look at some more stocks for you. So let's get stuck into that video now.
Anyone in the panel can answer this, but I think Bambi might be, because she's actually trading and getting a living out of it at the moment. I finished the diploma and I've been procrastinating, unashamedly admit that, but actually starting. Can you talk us through the process that you went through to actually start it and what you actually did to get that whole thing going? Because, you know, in theory it all sounds okay, but just actually doing it and trials and tribulations and mistakes and things, any pointers you can give in just getting started. But it's open question to the panel if anybody else wants to throw in some comments.
Yeah, I'll just say a few things first. Like everyone, you make mistakes. I've made a few mistakes. They weren't big ones, but you learn. If you learn from your mistakes, you find that you go back and see what you did wrong with your trades. But backtesting is a big thing, and I find now with the fact that I'm doing advanced trading, I notice I'm going back more to reinforce a lot of the diploma stuff. And like I look at the webinars, and if I'm not sure of a particular theory and I want to refresh it, I go back again, because the more advanced you become, the more techniques, but you still go back to the basics. If you know the basics, you can do anything. And you've got to reinforce the basics so that you can go into the advanced stuff. And charting, with my charting, I'll probably go and select the stocks from top-down analysis and then pick the stocks I want, and then I could spend up to 2 hours back testing and make sure I've got all the rules in place. And you just do that. It's basically just putting the hard yards in and being confident of your trade. So, I mean, you know, you've got to be confident in that you want that stock, and then be confident in placing your trade, and then make sure you follow your rules. The biggest thing is to make sure you get out if you have to, when the time is right. Don't procrastinate about that. So that's basically all it comes down to.
Can I say something briefly? Do you work? Okay. Okay. So most people with the job, they get an hourly rate, right? When you trade, you determine what that is. So if you get paid $20 an hour, $40 an hour for a job, Bambi spends 2 hours, and if that makes her $10,000 or $20,000, she's just made 10 grand an hour, hasn't she? So that's where doing what they do, the discipline that they do, will get the results. And so you determine your own hourly rate. Isn't that nice? to be able to determine. And a lot of people won't spend the time to do that back testing or going back to the basics and redoing it. I mean, as Emma said, she spends every day, she's doing something, either she's going over, reading, she's back testing, she's doing something, setting goals, and by doing that stuff is getting started and getting that discipline so that you don't procrastinate. Because people procrastinate because of that fear of getting started sometimes. If I do start and I lose money, then I'll feel really bad. But start at the level that you want to start at. It might be just $1,000. One trade, $1,000. It's not about making the money, it's about getting started. So $1,000 here, $1,000 here, $1,000 there. That sort of stuff, and get confident. So, yeah.
Just to add as well, before you even, get to the point of where you're ready to put in any money, you need to go through a process and have a set of things that you want to check off as done before you even enter or back test a stock. I'll look at monthly price analysis, and then go onto the weekly chart, and then go through, check your fundamentals. Make a list for yourself, expand on the trading plan that Wealth Within has, and do what works for you. Make sure you've got your 2 levels of price above, 1 below, and then go back to that method every single time you do a new stock, and have that as your, for me, it settles me that I know when I'm entering a stock, I've done everything possible, I've looked at every sort of situation, and then write out everything you think about the stock and have that on a sheet. And then as you, if you have losing positions, then work out what went wrong, and then try and build that back into your checklist for the next time so that you learn from that mistake.
That's the engineering.
Continuous improvement.
Yeah, it is. Hi, welcome back, guys. As you can see, that video it was basically 4 traders, all graduates. I think 3 of them were doing or in process of doing our advanced course. And as I said earlier, all of them are making 20-30+%. I think the gentleman on the right, the older gentleman, who was a farmer, 2 of them were farmers actually, I think, from memory on those. The gentleman, he was making at that time, he said for that year he's made 38%, I think he was talking about, because that video goes on for a hell of a lot longer than that, obviously, but it's just giving you some insights into some of our students and the diversity of some of our students. But we'll put up some more videos as we go along. Now, on the chat, I'll just have a quick look at the chat, so thanks for posting, guys. Ian says, hi Dale, a friend of mine wants to trade FX as it's a 24-hour market. However, after reading your book, I realised I didn't need to trade or watch the market every day. Who cares whether the market's 24 hours a day? If you want to lose your money, why do you need more time to do that? And people say to me, I want to trade overseas markets because Australia's only 2% of world markets. There's 500 stocks in Australia. Why do you need more than that? You only need 8 to 12 in your portfolio. When you're trading markets, you only never need to have 8 to 12 positions in anything. I was trading leverage like FX. I only need 2 to 4. I don't need to look at a lot of things. And I don't know about you, but if you see a kid in a lolly shop and you go, hey, you've got $10 to spend, pick some lollies, it takes them hours because there's so much diversity. So looking at a market 24 hours a day will make you broke. It is simple as that. It'll make your job harder and make you broke. But a lot of people don't realise it till they actually try and do it themselves, and then they realise that they're going down the wrong track, like this gentleman that I mentioned in my thing. Now, going back to the chat here, we've got where is it? Trent St. Quintin. He said, hi mate, I'm very new to stocks and I'm wondering, apart from the initial purchase, can a stock cost me anything while I'm holding on to it? No, it can't. It doesn't. When you own a stock, you own part of the company. There are no other costs. So buying, selling costs, that's it. Everything else is, there's no other, it's not like you having to pay the broker to look after it for you. Basically, it's all there. But when there's the brokerage to buy, brokerage to sell, you will get dividend yields if the stock does pay dividend yields. So no other cost. Jack Wheeler says, I have a position in CSR at $3 and want to know if you feel it still has more to gain or should I get out. So he bought in around $3, so around about this sort of level through here. So a reasonable place to buy into it. I still think it's got more into it. This point in time, it's looking good. It's just consolidated. Stocks move from equilibrium where they sort of go sideways and then they have breakouts where they go to disequilibrium on the upside, but they also do it the other way. So they'll go to equilibrium, drop out the downside, which is what we talked about a little bit earlier on one of those other stocks we looked at where the sellers just stop selling to allow the price to drift up a bit higher before they sell in and push it down again. The exact opposite happens on a bull run where the big end of town who want to accumulate a stock will start buying and it pushes the price higher. But then when it gets to a point where it's starting to get too high for them because they want to try and keep their average price down, they'll stop buying to allow the sellers to be in the marketplace and just steady price a little bit to not overheat that stock. And sometimes you'll see price drifting down a little bit and then go off again. Now at this point, this stock is just a bit of a consolidation before it's going to go back up again, but I still think it looks all right at this point in time. Right now, we're probably looking at I think you're probably looking at somewhere in the vicinity of $4.60 to $5, but that's a guess based on a really short analysis that I'm looking at here. But it does look quite nice at this point in time, or CSR does look quite nice at this point in time. And saying he's weak at the knees about the analysis I was putting on the All Ords. Okay, fantastic, Ian. Thanks very much for that. Liam says, hi Dale, huge fan. When purchasing new shares, is it worth investing in a stock while it's bullish, such as A2 Milk or FMG, or am I better off looking for stocks breaking through a bearish trend? It's a bit of both, and this is where understanding analysis and predicting where the future is, or how the future is likely to unfold in price pattern and time helps you. Now, I look for lots of stocks that have fallen away and starting a new trend, but obviously something that's moving into a new upward trend is a great stock to buy. So as you see, stocks will move up, consolidate a little bit, move up, consolidate, move up, consolidate. So buying them on the way up is fantastic, but you don't want to be buying them at the top where a lot of people do. All too often we see people buy stocks right near the top because they've moved up, and now everybody hears them and then they jump on in. And we've seen that with A2 Milk and Bellamy's, and what's the other one? Bubs. And we've seen some of those fall out of bed after that because a lot of people are buying near the top. So it's a little bit of both. You got to have different rules for buying now at the bottom of a trend, and we have different rules about buying during a trend that will keep you safe, protect your downside, and make sure you're getting it at the right time and making sure there's plenty of upside for you. But fantastic, really fantastic question from you. Ian Benson says, hi Dale, I'm currently working my way through Module 3 diploma. Oh, well done, matey. And I think you need to create hello and welcome merchandise, welcome webinars. I say hello and welcome on all my webinars, so he's got that stuck in his brain, so thanks very much. We've got Bill saying, hi Dale, what level of experience do you think traders should have before they start short selling stocks? If you can't trade long properly, then don't ever try and short. It's a different proposition. You've got your brain's not necessarily wide for things to lose money, if that makes sense. It is a margin position, so you are leveraging. I would suggest you paper trade short selling for quite a while before you did that, and look at specific stocks. But you always find stocks that are going up, and I'm not saying don't short sell, you should short sell, but you really need to understand timing the market first before you short sell. So you need to understand trend analysis, pattern analysis, and time analysis, because if you don't have time analysis, you're not sure where the bottom's going to happen, and if you're not sure where the bottom's happening, you might still be holding it way too long as it's already starting to rise, and you'll get caught up in a short squeeze. And I won't explain that too much to people. Moving on, what do we got here? Andrew said, hi Dale, currently own a CKF, an ASX 300 stock, monthly trend up, valid weekly trend line broken recently, but now looks like should trade through $8.40 and move up to the $10 mark. What are your thoughts? Great question, Andrew. So let's bring up CKF. So I've got that there. What he's saying is really trending up, doing really, really nicely, and I agree with you. It looks beautiful. This stock, if I bring up this. See how beautiful this trend is? Now, this is a stock that's not going to give you lots of heartache. It's got good volume going through it, 7.5 million shares. Great stock to buy, and it does move quite well. If we look at this from this low here back in March to currently 68.9%, this is a far better stock than a lot of those other ones we looked at a little bit earlier tonight, where people are trading illiquid stocks that don't trend as well. So this would be so easy to trade, it's not funny. So I think it's doing quite well. Going through, should, like Looks like it should trade through 840, which is roughly, I think it will. It'll keep going up at this point in time. It may have a 1 or 2 weeks down, but I think it's really nice. It's had that consolidation in. It looks pretty good to me, mate. So well done, good pick, and stay with that. Audrey Jakimov, welcome, a lady, fantastic. We need more ladies on the show, Audrey, so tell all your friends to get on the show. Hi, Dale, I would be interested in your thoughts on CVN. I bought on the pullback at 41 cents and now hitting resistance. So let's just bring up CVN. Let's have a look at that. Very liquid sort of stock. Look at it, massive illiquidity talk. You bought that at, what did we buy that? 41 cents. So she's bought somewhere around in here. And now hitting resistance. I can't see it hitting resistance. I'm not sure where you're getting that from. I don't expect that. I don't like it. I just think it's probably going to fall away, actually, but I don't think it's hitting resistance. Not a big liquid stock to me. 18 million shares at 50 cents. It's better than some of those other stocks a little bit earlier, but a little bit illiquid. But I'd be worried about it falling away at this point in time, Audrey. So that'd be my quick 3-second look on it, given that we're pretty much out of time at this point in time. Jack says, what do you think of Rio to buy at the moment? It has obviously strong trend line with low P for that sector. Do you think it will continue its bull run? We like materials. Janine and I like materials. We like energy and we like healthcare moving forward. Rio looks great. Have a look at that. That's a beautiful stock. I think it's got further to go. BHP is a great stock. Materials, I like it. We're seeing iron ore going okay. With the Aussie dollar coming off, it'll change things a little bit, but I think as the economy moves forward, it'll look great. And obviously with the Reserve Bank putting interest rates down, it's one of those things, and they're talking about putting them down again. That can only stimulate our economy. Obviously, we've got stagnant wages growth, etc., so people are still a bit reticent to spend, but you really need to be pushing off or getting rid of a lot of debt at the moment. With the low interest rates, if you've got debt, you'd be I think you should be getting rid of housing loan debts and bring all that down, because eventually what goes down is going to come back up again, so interest rates will come up again as well. But right now, really, thank you very much, everybody, for being on tonight's show. And thanks for participating. But if you'd like to see this show grow, now we'd like to get several hundred people on it every single week. So Janine's back next week. So tell all your friends about it. So remember to share it on your social media with your friends and colleagues, with your Twitters, your Facebook and everything else. So we want to surprise Janine next week and have over 200 people. So do you think we can go into a deal on that and shake hands on that and say, hey, let's get a lot more people? Because the more people we get, the better the questions and the better participation we get, the more we can do, as I mentioned a little bit earlier. You'll be helping somebody else, and at the same time, the more people that join, the more we can share with you, and this means everybody learns a hell of a lot more. Also, make sure you put this show onto your calendar next week, so you're back online next Tuesday at 7 p.m. But if you can't be with us online, we'd be sad not to have you next week. But we're always happy to receive your questions. As you see earlier in the show, we had questions that people emailed through. So send them through to info@wealthwithin.com.au and just type Wealth Within live into the subject line. So Wealth Within live in the subject line. But that really does bring us to the end of the show. My voice has lasted the whole show, which I'm absolutely stoked about. I have missed Janine. It goes really quick without her. We really do hope you enjoyed the show as much as I have in presenting it to you, and hope you got a lot out of it. And as always, thank you for taking part and being such a fantastic audience and participating with your questions. We had some rippers tonight, which is great. So we'll see you again next Tuesday at 7 p.m. But for now, goodbye, good luck, and good trading.